All right, let's look at gold, silver, and the miners. So we know that the DXY is down today. That's giving gold and silver a bit of a push. The first thing I'm going to say is, look, remember when gold was down here, 1885? The DXY was nowhere near as high as where it is now. So the fact that the dollar index is at its highs and gold is way off its lows, that's pretty nice. That's good little reassurance. We're $40 higher despite the DXY being higher. Now, for me, I've added this little descending line. They're my favorite trend lines to play. You can see, okay, it's not absolutely perfect, but I think you get the idea. That is something to break on the upside. Ultimately, once we close above 1950, and we will, I don't know if it's going to be on this particular cycle, but if we get a breach and a close above 1950, straight up to 1980, for me, if you take out 1980 and you close, by take out, I mean a close above 1980, you're going up to 2100. I don't see why a close up here. I mean, for me, that means straight away you're going to be testing 2050. You may have a little pit stop at 2020. 2000, by the way, is irrelevant. You go straight through that. You pit stop at 2020, then 2050 is really the next only hurdle. When you close above that, then it's all over. But I think if you can close above 1980, you can pretty much guarantee a test of 2050, unless there's some breaking news that just sends it down. I can't see that happening. But to get to 1980, you've got to close above 1950. And before you even test 1950, you're going to have to make contact with this descending. Is it going to happen today? Nah, there's no big news coming today unless there's some breaking news. And I don't see the DXY breaking its lows, but it's good to see gold and silver react so far green to the DXY being down. But ultimately, you've got to really look at the DXY. So far gold is being suppressed because of the DXY. And I still think the DXY, unless, especially the Bank of Japan, unless the Japanese yen starts to go crazy, I think the DXY is going to go higher. What we need is gold to not break its lows whilst the DXY continues and finishes its particular cycle boom that it's on. So even if we go down, I don't want to see gold down today when the DXY is red. But as long as we sort of hold sideways, the DXY continues to go up. Maybe we go lower as the DXY goes up, 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 makes new highs, maybe tests 106. And then whenever the DXY starts to break down, and we'll have a better ideas later in a couple of days when you have a couple more daily candle charts and maybe you see a topping formation wherever that takes place. What I would love to see is that happen before gold breaks down. And then you have this sort of, I think, what would be a double bottom, down here, let's say just below 1900 or maybe even above 1900. You get a higher low double bottom in gold. DXY looks like, okay, now we're going to go lower for a while. And then you see gold start to break out. That would be beautiful. And then the dollar index really starts to roll over for whatever reason. Maybe now interest rates are leveling off. Maybe there's a market crash and the dollar just goes down with it. People think that the rates are going to get cut, or lots of reasons that the dollar index can go down. And fundamentally, it should go down, actually. But I think I would prefer to see that. I think it's also more realistic. So, yes, on the upside, if gold starts to break out and starts to close above 1950, it should go higher. But realistically, I don't think that's going to happen because I think the dollar index wants to continue higher. And I think if it does, as long as gold doesn't break down here, then it could be very, very bullish for the medium term. So you could have a bit of short-term weakness in gold, but it could set up a really strong medium and definitely long-term move up. So for now, today's sideways up a little bit because of the dollar index. That's the resistance on the upside and support on the downside. It's very visual, very obvious, and I've gone through it. Silver came down quite a lot. Now, I did say a few days ago that gold, silver would equalize a bit. I thought that gold would catch up with silver, whether we go up or down. We went down, and of course, that's what happened. Silver went down more than gold, so gold caught up with silver. And silver's showing some strength around 23. That's good. That's normal. It's come down quite a lot, so you'd expect it to be up, in this case, double. So if we move up, I think, yeah, the resistance lines I've got in place remain. I think 20, really, silver is quite simple. It's every 50 cents or 1 unit increments, and it happens to coincide with prior resistance. So for me, 24, that's resistance. If we go higher, I don't see that happening because, again, for us to take out $24 and on the upside in silver, that would mean gold closing above 1950 probably I don't really see that happening. And then if gold starts to make its run towards 1980, then silver will definitely be testing, if not closing above 25. And then for the 2000s, we got 26. So silver had a really nice run here when gold was much lower, but now that gold's caught up, I think you'd expect gold really at 1980 for silver to start closing above 25. But on the downside, silver should be very, very strong. Look at this ascending support. Also here, this is gold at 1885. And I mean, it is possible, of course, but I expect a lot of strength. There could even be a fake flush, comes down here. Oh my God, we've broken it. I thought this was supposed to be really strong. And then bam, reverses. And then you got this daily candle that closes just within the ascending. And then it becomes really strong. For me, this is a buy. If silver goes down here, it's a bit of a buy. So, but today will not be that day. Today should be a green day. So just keep it simple. That's your support, which we won't see today. Resistance 24, 25, 26. Okay, let's look at the miners. They're up pre-market, makes sense. Not the best candle on Friday, right? And a couple of miners were really weak. A couple of the silver medium tiers that I hold were even making new lows. So some of them are really, really weak. But it's not a problem, as long as you have a long-term thesis and those particular miners that are weak, you think are viable long-term, then it's an opportunity. As long as you have a lot of cash on the sidelines, you've got to have a strategy. You can't freak out, and emotions should be checked at the door, etc., etc. So besides some of the candles not looking great and some of the individual miners not looking too good, what was it, Metal Royalty or something I saw on Friday really got drenched 14%. I don't even know why. I don't own it, but I was looking at it. But quite a few miners are really attractive at this level, but I still prefer the seniors. On the way down, the seniors, very, very nice. The Agnico Eagle, Barrick, Newmont's very strong relative to the index and to others. Pan American Silver, etc. I need to do a weekly update. But yeah, there were a couple of miners that were pretty interesting. Some of them were outperforming, some were underperforming. The GDX, as you can see in the GDXJ, not the best candles at all. But sometimes you get these types of candles before you get a strong reversal too. It's this big fake out. Technical analysts do get played with, like me. So sometimes you got to take note that it's not always guaranteed, of course. So today you expect a bit of a higher open because of the move so far, but let's see, resistance, this is the old resistance I had. I guess this is still resistance. I mean, look at this candle here. There's resistance all of this period. So it should kind of be very, very zoomed in resistance. Now, if we can go higher, to be honest, this I can remove because that'll be irrelevant. If we start to go higher than 35.5, by the time we start hitting the old highs of 37-ish, we'll be hitting descending resistance. So for me, 37 is easily resistance. But again, this would require gold to be, testing 1980 probably. So I don't see that happening. On the downside, really, you've only got one support level. It's 33. So for me, very simple technical levels to watch. 33 on the downside. This would mean gold below 1900, around 1880, 1885. I don't see that happening today, but on the upside, 35.5, 37, that's GDXJ. GDX, same thing. On the downside, this sort of 1885 gold level, let's say 27.3-ish. This here is probably 1900 test, call it 28. I don't really want to put it in because it's too many lines, but it's a real one, so I'll put it in. And on the, let me get rid of these. And then on the upside, yeah, I'll leave this one in, very simple. So we got 29.5 and then the high of 30. Nice big number. That should equate to gold around 1980, but also it coincides with the descending just like GDXJ. So I think it's pretty clear levels. This one I can remove, no longer relevant. Yeah, I'll leave these here just in case we start to surprise on the upside, but otherwise that's what I see. Makes sense. Okay, hope that was useful.